All right, so we're in the middle of July, entering the middle of July, middle of the summer. Summer markets, holiday markets last week, though last week we had better movement than so far this week, except for about an hour ago. And that was a comment that came down the wire. Even though I talked up a little bit about it in the trading room, let me talk about it now. Donald Trump Jr. yesterday came out that he met with a Russian lawyer. So today he released his email chain in which a Russian government intermediary said he offered to help Trump's campaign. Trump agreed to set the meeting. Quote, this is obviously very high level and sensitive information, but it's part of Russia and its government support for Mr. Trump. And so it's just something that could be just fodder for the media. But the market initially broke 15, 16 points because the uncertainty it creates. If there is collusion, what does that mean? Not necessarily for impeachment, but what does it mean for getting some positive things through that the market's rallied so much since November? That election, after we had that big sell-off on election night, we rallied, made all-time highs again and again and again because of friendly tax reform legislation that was going to get passed and all this other great stuff, and that just is something investors start thinking about. With that being said, who am I to sit here and predict if this is bad, good? A lot of times what happens, and you got to be objective with things like this, when it becomes the political stuff that hit the tape, don't be, if you're a Trump supporter, you're going to look at it and find reasons why this is nothing. If you hate Trump, you're going to find reasons why this is something, period. And I think in this case, both sides have a good argument. I think yesterday, there was nothing. Today, a little more something. That's all. I'm not going to predict that it gets any worse. Usually, it's like anything else. It goes away till another train wreck, and then they talk about something else. So I think they have to get the hardcore agreements that they were doing stuff together. But whatever. It did make the market go down. So no matter your political preference, we went from 26 even to 10 even in about 5 or 10 minutes, right? 15 minutes. So you got to make sure that you strip out your political preference, and it's okay to have a political preference. You should, but you got to strip that out, and you got to filter it from not how you want to see it, but for how the market sees it. So I kind of ended the trading room by saying, forget about listening to the news and reading the paper as to what they think, because what they think is irrelevant. It's what the market thinks. We have a better tool to know how important stuff is, and that's the smart money. The smart money obviously is putting their money in and taking it out of these markets. So I look at the bonds, and I'll throw the bonds up with this. And by the way, this isn't what I was going to talk about, but it's important that I do, because there's going to be subsequent. I always look at these meetings as a lot of times I come prepared with content. In fact, 95% of the time I do. And then sometimes there's stuff like this, a live meeting in a conference, and we just came out of a big move because of a story that came out. Let's talk about it, right? We're all in a conference room, and we're all going over what the hell happened. So you look at the bonds and what happened at 11 minutes after 10 is when this story hit. It went up like it should. If stocks go down because of fear and uncertainty, bonds go up because of fear and uncertainty. So they rallied, not a ton, but a lot, given how slow they were, right? So this is just meandering back and forth, and we don't have big moves, and then wham, we have a big move from 154 or 151.26 down here up to 152.05. Then subsequent sell-off, retracement back down into the 151.30 area. Now it's trying to climb again. The thing to know is the stocks bounced more than the bonds came off. So yeah, the bonds came off only 50%. The S&Ps came back 75%. And Les has a thin spot, or a double stack thin spot that the bonds came back down to. I'm going to show a lot more of that as we go forward. But the bonds went up, then came back down a little bit. The yen looks like a bond chart. This is Japanese yen, same thing, risk aversion. They take money out of stocks. They go into products like the yen or the bonds, and here's the reaction. They look the same. So those markets, the yen and the bonds, seem to be thinking maybe the story is a little bit, got some teeth to it, in other words, than the stocks so far. Remember, the stocks haven't come all the way back. If we look at this on we take a look at the S&Ps on a 5-minute, they started around 26, 25 even, right? Fell out of bed to 10. They came a little more than halfway back and to what was the old low, and a big delta profile that stuck out around 21. There's no surprise that's where they stopped. So they're still weak. They didn't take it all back. They're not super weak like they will be if they get down in here or there, but they didn't give it all back in a very timely manner. So the market is still trading this thing as it could be problematic. The bonds are back near the highs that they've had. So they're thinking it still could be problematic. These are the things you watch to become more educated as to how much teeth a story has. And if we revisit these lows and still have some deeper sell-offs, continuation, then they're pricing in worry, uncertainty. Doesn't mean the president gets impeached or anything that extreme, just more resistance and barriers to get stuff done, as if we need more barriers and resistance for politicians to get stuff done. And that's where we're at if you just look at how they reacted to that story. Most people will miss that in a timely manner and go through this analysis. I initially missed not the story, but what the story was. I read the first part of it and I thought he was releasing, and he was, his email, so I figured, well, they must have been good. Why would he release it? But we still got bearish pretty quickly when it got below 24. And we had a bearish transitional bar on our B2B bars. If you're not sure what B2B bars are, watch them at recorded sessions in track 4. But we had a B2B bar right in here above these yellow lines. And as soon as this damn thing gets through the VWAPs and slices through a spot where it could hold, whether you know a story is out or not, you know from being in this program that who's stuck? People that thought, they're longs. Why? Because they thought this open, the VWAPs, all this stuff holds, and it slices right through them. So we were bearish before it took it out, very bearish after it takes it out. Because it takes it out, it doesn't give those guys a chance to get out. So that's where this market is at right after, and now about an hour after that story. What I want to prepare guys for, because you can make or lose, but if you're prepared, you could make a lot of money and opportunity if there's any more stories that come out that either exonerate these emails, or worse, there were more meetings, more activity. Let's not predict, there's not going to be anything else, this is it. Maybe, but why would we want to get into speculating? Let's just get into trading what we see and not what we think. Reaction to what the hell's going on. By the way, this would have been a bearish B2B bar as soon as we came down in here. Maybe not this high. As soon as it got fast in here, you would have put a bearish bar, and the bears put themselves back in the driver's seat for more downside, which they've had after you would have made this a bearish bar, and so on. So that's just a recap of what's happened and what to expect. I usually prepare for these meetings on Monday, go over what I'm going to talk about, create slides if I'm going to create slides. I didn't have a chance to do that, but some of you know my son broke his arm on Sunday. Seems to be fine now. He doesn't need surgery or anything like that. But yesterday I didn't trade. I'm actually doing all for this stuff from my home office, which I'm set up with a similar workstation as my other office. So it's been kind of hectic going through that. But it reminds me of things like listening to the doctor talking about pain management, right? He says now he's got a clean break. He doesn't need surgery. These are all good things. He said the bad thing is it's very painful, right, for anyone, a kid that's 6 years old or someone that's an adult. And so you've got to manage his pain, which means follow directions. Well, pain management is the same as risk management. What you're doing is managing your risk. Now this is what made me think about a little bit of content and a topic for today's meeting, is it's also not good to not feel pain, because you'll start moving around, and I've seen it with them, and doing things because you feel good, but yet you still got a broken bone, and it's going to catch up to you. And it caught up to him a little bit because he was in a lot more pain second night than the first night. Not because we had him running around, but he probably moved around a little more than he should have. And so that's the key with trading, is like, you don't want to have pain, but you need a little bit. You got to know how to deal with it, which is called risk. We're going to use, instead of the word pain, risk to replace it. Because what does too much risk create? Pain, doesn't it? When you take on too much risk in life, you're taking on some emotional pain, whether it's in a trade, in an investment, in a job, in a relationship. Another thing hit that he will test in front of the Intel committee. I don't know if the senator came out and said that, but he's willing to testify. So that's going to be interesting. They're going to beat the hell out of him. That's going to be potentially a tradable event when that happens, if it's a public hearing. So that's going to happen in the near future, I would suspect. The headline simply states Donald Trump Jr. testified before the Senate Intelligence Committee. Didn't say whether it would be an open or closed session. So getting back to risk and pain, right? You've had risk that turned into pain. Why? Because at some point you didn't manage it. However, no risk, no reward. No pain, no gain. I don't want to use that's overused, but it's true. If you want to get in good shape, it's not easy to be fit. It's not easy to have big muscles. It hurts to lift weights. If it doesn't hurt and isn't a pain in the ass, it's just like, the only thing easy to do is eat chocolate. What's easy to do is usually not good for you. What's hard to do is. So the fact that trading is hard, it's probably because managing risk is hard. And it is. You hate to get out of trades that might turn to a winner. So it just underscores, the doctor had said to me, you got to manage this kid's pain. You got to make sure that he, even if you think you could wait 7 or 8 hours to give him the medication, don't in the first few days. You could start pushing it out after a few days, but in the first few days, manage his pain. But then also make sure he doesn't feel so good as to run around, because he might. And he did, and he would have. Now, those are things that make sense once you're told. We don't think about this all day. Do you think about when you have a fever that the first thing is you want to get the fever down so you feel better, but the infection hasn't left your body? The fever does what? The reason why you have a fever is to kill the infection. You know, you mask the problem so you feel better, you still have an infection. So you get up and you're doing stuff and then you crash. Don't crash when it comes to a trade. If you're getting away with trades, if you're very uncomfortable in trades and they're winners, you're probably going to crash at some point. If there's always a ton of effort in your winners and you've got some winning results, they're probably not going to last. The market is probably just let you get away with some bad trades or ideas. So you got to always know what kind of schedule you're on. You know, with a prescription, they lay it out for you. But with trading, you try to lay it out for you in a setup, okay, and with rules. But the one thing people miss is, well, these rules are good for this setup in this kind of a market, but it's not good for that kind of a market. And that is when the market goes fast to slow to okay, real fast, choppy, direction. There was really no good direction this morning until 10 minutes after 10 this morning, 11 minutes after 10. Then all of a sudden it was direction city, right? Not only to the downside, but a nice rally off the 10 evens, which, if you watch edge patterns, long down up bar was the first moment that the bulls had a chance to take it back up. You knew that down in here. You didn't have to wait till it went back up. And we just glided back up to 21. 21 was the best chance for a decent sell-off because it was a big delta profile that stuck out. Well, first 18.5 was, and then 21 was the biggest one. It came off a little bit because it's 1347 traded. So it comes right into 21 and comes off. So you're making predictable, you're making some skilled predictions sooner rather than later, and most before the rest of the world. You gotta document on how your effort is with each trade. I put this into a specific video in track 3 very early on in this program. The easiest track to go through is track 3 because they're ebooks and they're short videos to watch a few times. Track 4 is pretty cumbersome. At some point, it's hard to go through track 4 beginning to end because there's probably 120 hours of content there. So I'm in the process of even breaking it up tighter where we don't arrange it anymore to dates but under a topic to make it real tight and easier to go through. Then you could bounce around more sequentially. Early on, I did it in a specific sequence. Then as you go on, different topics, we'll have content that fall under different topics. The point I'm trying to make is that in track 3, I did a video and talked about when you review your trades, you got to calculate the effort, which is invisible. Your average winner, average loser, your number of winners to losers. Those are all tangible. They're in your statement. They're in some sort of process you have to look at your statistics. What's invisible is the effort that you put into it. I've talked about this not a ton. Maybe I should talk about it more, and I'm going to right now. But what's invisible is usually the most important. It's usually the thing that comes out of nowhere and knocks you down. And that's a good tell. The good tell is if I got to bust my ass to make a little bit of money, I got to rethink this. I'm taking on the same risk to make a lot less. The trades are just grinding. I'm not getting paid quickly, and that's relative. Paying quickly for a short-term trader is having the trade go your way pretty quickly. For a longer time frame trader, it's just not taking a bunch of heat. You snap out your area, and it's not violating your area. That's an effortless trade. But if your trades are just busting you, and they're squeezing you, and they're testing you, and they're getting you to make about 4 or 5 decisions about what to do with your stop, but yet they end up being winners, it doesn't mean all is good, I just got to deal with the emotion better. No. You need some effortlessness. Now, it would be great if every trade click went your way. That's not going to happen. But you should get some of those, right? You should have some of those. You should be able to accumulate some of those. Like, there could have been a month made for me had I read that whole comment and jumped on that sell-off earlier or with more aggression, with more size, because it seemed like the fear was going to at least be maintained for a while, and the momentum kept to the downside. And the bonds and the yen were a great ancillary. When you got short, you could stay short because they weren't telling you to get out for a while in that sell-off. But there'll be more, meaning there'll be more statements, whether it's under this Russian umbrella or just somewhere about something else, that'll give you a chance to trade what you see and not what you think anymore. See, the bonds are still, I told you, they didn't roll over as much as the stocks bounced. Brainerd's talking right now, and it could be the reason for, she's a dove and said should move cautiously on further rate increases. That's a little bit for the pop in the bonds, but she's a dove anyways, so this shouldn't be a surprise she's saying these things. She's a dove, meaning she's anti-higher rates, and she said the Fed should move more cautiously, or should move cautiously on further rate increases. She is a voter. Appropriate to begin shrinking balance sheet because Fed funds normalization is well underway. She continues, these comments continue to be laid out on the wires. Here, let me show you this though again. 30-year bonds. They rally on the fear that this Trump Jr. story has some teeth. They rally from circle to circle. Bonds go up in a fear uncertain environment. Everybody retraces. They retrace about 50%. At this point, though, we don't know that they're going to stop retracing. We know that now, but we don't know it when it's down there. But when you start to see it become a swing low, maybe in here is when you could say, hey, they only broke about 50%, took back 50% of their rally. They have a chance to test these highs. In fact, I think that's what I did say when we came on a little after 11. They have taken out these highs. They have done this perfect rally, take back some, re-rally, and it looks like a kind of an uptrend. So the bonds so far are taking this story still of having some teeth in it. The Japanese yen, same chart pattern. Rally, retrace some, maybe a third. They re-rally back to make higher highs. Let's just to keep this line chart to line chart so it's consistent, trying to understand this. Stocks are going to move opposite bonds in uncertain conditions and headlines. Stocks get weak. Well, they got weak. 25, 26 down to 10. A very short period of time, within 15 minutes. They came back about 3/4, a little less than that. Halfway would have been down here. Third of the way would have been down there. They went in, probably a 618 retracement if you're a Fibonacci guy. But anyhow, they had a big reason to stop at 21 even. We talked about that. It was the previous session low that they had put in there. 19/4 was yesterday's low. They held all that, and they come rotating back down. And now it's going to be interesting to see where they go from here. I wouldn't have said that they were going to come and take this out in this one sweep. It's just too far away. It was easier for the bonds and yen to make higher highs than it was going to be for this S&P to just come down and make lower lows. They're going to have to chop around, and you're really going to have to focus on bearish transition to get on that team on the way down. It's not going to be a quick sell-off straight down. It just doesn't happen. With those Brainerd comments, that's both bullish for bonds and stocks a little bit. So don't get confused by that. You got to know that. If they're going to rally on Brainerd's dovish comments, well, so will the stocks, because they both like low interest rate environments. But going back to the pain management into risk management, everybody has better ways to document what the hell you're doing. And I know I've been telling you this since the beginning of the year, and I told you it would take longer than I would ever suspect. But there are things that will allow you to document. If you're using this aid that has been created, that will allow you to document. You got to put a little of the effort in. It's not a lot of effort. And you got to know what you're documenting to be consistent. But there'll be something to help you document and review and kind of track what you're missing. Because that's another thing that's invisible, what you miss. You've heard me say my worst trades are missed trades. Well, that doesn't show up in your stats or on your statement. But boy, it shows up in your performance, doesn't it? Missed trades, the worst trades you could have. It's a small bullish bar back up, by the way, and this triple stack in here could hold. So you can't overmanage your risk. I'm getting back to this point. If you overmanage your pain, you're going to start jumping around and still got a broken bone. It's going to come back and bite you and hurt you worse later because you still got the injury. You're still taking on risk. So you can't overmanage it. You can't be numb to it. You got to always respect it. Not feeling any risk because I'm on a roll. Not feeling any risk because I've had some effortless trades. And Anthony said, got to have some effortless trades. I'm making some money. I'm not feeling the risk. I'm not feeling the risk. Always feel the risk. It's part of managing it. Knowing where you're going to get out before you get in is part of managing it. Not getting cocky is managing it. You're getting confident and cocky. Market has a great way of putting you back in your place. It will come back and you'll wake up in the middle of the night in a lot of pain. So you've got to manage your risk and find that sweet spot. But you still got to feel it. No risk, no reward. And that's the needle that we have to thread that is not super easy because it's different for everyone, number one, but it is a needle you have to thread because who tells you? You got to have some, but not too much. And it's so easy because of emotion to get overconfident or depressed. Both ends of the spectrum. Real easy. It's real easy to get overconfident, and even more in this business, it's easy to get beat up. I can't do this. Not working. Well, did you give yourself the best chance? Did you analyze what you're doing and review it? And I would say most people haven't. And I couldn't even predict. I just going on a smaller percentage in this environment because you guys are hard-working people and much harder working people than the masses, or you wouldn't be here. But still, just based on human nature, most people don't review properly. I think I have something that'll help. Would you agree, Bruce? I think, and after I hear Dr. Steenbarger at our workshop, Tom, I'll tell you which one of his books would be best. If you haven't read, I think he's written 3 or 4 books. So I'm thinking of having for trading room guys, not just edge guys, it'd be trading room guys because that's the environment, that's the venue I'm doing it out of. If you don't have a trading room sub, you want to come back to the trading room for 1 or 2 months. Those that are in the trading room as members of the room will have some live look-ins to the workshop live event in 2 weeks. Not the whole session and not a bunch of hours, maybe an hour here or there. Because I'm not going to run the trading room that Monday, Tuesday, Wednesday like I do normally. But if I decide to do it, there'll be an email sent out with details of it. So don't ask me much of it now because I don't know about it yet. Which one, David? Oh, the second one. I didn't read your comment. Okay. I read that one, The Psychology of Risk, Tom. The owner of my prop firm told me about that book. So I asked him the same question. I was going on vacation. It was early on in my career. I says, Dave, you got any books you'd recommend? And he said, that one. This was back in 2001. So Dave says his first book is more academic and the second one based on real and actual traders. He says it's excellent. What's the name of it? Steenbarger's second book. Bruce, have you played with it, used it? Enhancing Trader Performance is the name of the book by Dr. Steenbarger. Enhancing Trader Performance. Is that the one you're reading now, David? I'm going to give you, Dave says, I got to give you the word that's going to equal success, consistency. I wrote it on my board the other day. If you're not consistent, you'll never be successful. And what have I said before? I'd rather you be consistently bad. At least you're consistent, right? At least you're consistent. And you could say, this setup sucks. I'm not reading this market right, or this, doesn't work. I gave it a shot, and it's not. I'm consistent. Now you're not questioning the setup, the idea, it's like, I tried this workout or I tried this diet and it doesn't work. Well, how long did you try it for? A couple days. Well, you're not consistent. It might be a crappy diet. Well, I tried it for 3 months and you've done what you're supposed to, yeah, and it doesn't work. Well, no, look at me. And I'd say, yeah, you're right, it doesn't work. It's a crappy diet. But at least you could say that with confidence and clarity. The diet sucks because you tried it. You were consistent. But be consistent with something bad, I guess, could be, in order to determine if it's bad. Hold on one second. Well, I think, Mark, I have something, a friend of mine has something that'll help you with that. So Mark's question, it's a good one, is, how do you organize your process that you're not all over the place? That's very subjective because what might work for one sucks for someone else, right? What keeps one guy in shape might be similar to another guy, but not exactly the same. Different kind of workouts, different times of the day, It's the same, you're sweating. How you sweat, you achieve it two different ways. So I don't want to give you your you just got to do it. You got to be able to review properly. It all starts with a proper review of what you do. Because think about it. You have to, that's why there is no setup that's going to be black and white that I might have that you could duplicate the exact same way. Right? People are different. The way we're going to make decisions are different, and there's all kinds of ambiguity and reasons for that. So you're going to have to tweak it, but then you got to be consistent with the way you tweak it. And how do you know if you are? How does a baseball player know if what he's doing is working? You look at his stats, but what if he's not swinging the same? Could you imagine? Listen to this analogy. If you were a hitter and you had a different stance or slightly different tweak every time you went to the plate, and you looked at your stats and said, it's not working. Well, what's not working? You go to the damn plate with a different stance every time, or you slightly change something every time you go to the plate. Same pitcher, facing the same pitcher, and you slightly have an open stance, closed stance, and maybe not the opposite batting stance, but something different. And if there's something different each time in what you're trying to do, there's no consistency in how you're trying to apply your trading. Now, how do you know what's off for you? Is it a big thing with you're trying to apply your process to the wrong time frame? Could it be your locations suck? Could it be you're making too many decisions? Could it be that you're in the right setup in the wrong market? Could it be all the above? Could it be you're just not recognizing things in a timely manner? You're under trading. You're over trading. You're missing it. You're catching the crap ones and missing all the good ones. How do you know any of that? And even Dave said, the book has an interesting section on consistency. That's his second book. He's written 4. So Dave so far read the first one and is into the second one. First one is good, more academic. He really is liking the second one. And Brett's speaking at days 1 and 2 of the workshop. I think you're going to enjoy him. A lot of you edge guys might enjoy him better than me because you've heard me. There's a couple new things I'm going to talk about, better ways to look at the same thing, but and how much more could you like me? I mean, really, there's got to be. We're so out there in the stratosphere and liking me. Can we get higher? In my humble opinion, I don't think so. Trading Psychology 2.0. I don't know what his first one was. I think it was, what was the first one, Dave? Title of it. Here, so the NASDAQ takes out a swing high first, and then we get bullish again. Because we were bearish. This might even have been the bullish bar right here already. Are you following ancillaries? Well, yeah, they're helping me. But are you documenting when they're helping you? Are you consistent in saying they're helping you every time you watch them? You're watching them every time. What are you missing? These are things. Yeah, why wouldn't he, Bruce? These are things that a friend and I talked about a long time ago. And then finally got around to creating a very simplistic aid to help people really have no excuse to review. I can't get into it much. Like I couldn't back in January. I think I brought this up. I can't yet, but much closer here in July. And Kepler's coming still. Yeah, of course. And I think you guys might like Kepler more than me for 2 reasons. You've heard a lot of me and maybe not a lot of him. And going back to how much more could you like me? "17 years, Bruce." Someone's asked, how long did it take me to create the B2B method? It's not something that isn't something that I'm talking about to help people review, as you know. But I've always talked, if you go back to some videos in track 4, I think they're called transitional moments. And what I've been able to do to help me and to help others is always find better ways to look at the same thing. A different way to look at the same thing. You guys have collaborated and found better ways to look at the same thing. What's missing in one's quest to be a successful trader is the core principles you need to learn. And then once you learn those, then you go and you add better ways to look at the same thing. It only comes with collaborative effort. The B2B bars just came when I was on vacation. How can I get these turns to be clearer to people? And that's what I came up with. Always asking yourself the right questions. How could you get better? And how could you convey something? So for me, it's not just trading, it's conveying, right? I'm always conveying things to people and trying to get better at that. And how do you get better at that? Is do things like this. This review aid, you guys are going to like. You're going to say, wow. I don't know how much it's going to help me, but it's going to help me. Might help me, might be the difference. Maybe not. But some it might be, some it might not be, but it's anything that won't hurt you is only going to help you, and it will help you. Oh, so the B2B, Bruce. So I wouldn't talk about B2B bars like when I did a live seminar a few years ago because, again, didn't have the idea to make it a better visual. But turns, we would talk about turns. And here's the thing, as a guy that has helped other people, I've become better at it because I used to gloss over what I thought or assumed people knew. And so I would just move through it. Then I circled back when putting this EDGE program together and make sure there were no stones unturned. I think though, when you come back to those that become consistent, and I don't know the section of his book, Dave, that talks about consistency, but I'm not looking for consistent results. First, I'm looking for consistent actions. I want the person to be able to say, I'm not swinging this hammer right. Why? Because I'm swinging it this way all the time and the nail doesn't go in. What am I doing wrong? At least you know you're doing something wrong before you get on doing it right. Or this batting stance might not be working. Why? Because I've just stayed in this stance against the same pitcher, and now my results are bad. Well, how do I get consistent results? Well, let's swing consistently first. How about that? How about we do that once? Well, how do I know if I'm swinging consistent? We got to review what you do. We got to look at film of you. In fact, Saturday, I went to one of those golf simulated things with my friend, and we're having a few drinks, and there's sitting on the couch, and they do some cool things. They show you how your golf head is hitting the ball, and really shows you everything you're doing wrong. And I looked at it and said, well, I'm not trying to golf to make money, so I don't care about any of this stuff. I'm really not going to get involved. These are cool tools if I wanted to be a really good golfer. They seem like really simple and good stuff, right? That's the point. Just swing the same each time. And I think a lot of people have this problem, is that do you feel like every time you click the mouse to open a position, you really don't know what the hell is going to happen? Like it could be a great trade or it could suck. Because that's what you want to kind of form away from. You want to have a higher expectation. You're not going to have a great high level of expectation ever to say every time I open a position it's going to do this. That's not going to happen. That's a 100% win rate. But just for a golfer, here's the parallel. Good golfer knows that every time he swings the club, it might not be a great shot, but it's going to go up and out there. You know what I mean? I don't know that as a golfer. Again, you could go golfing with me, and the first couple holes you think I was a pro. The next two holes, I'm a maniac. Maybe never played before in his life. And it's because when I go in my backswing, I have no idea how the ball's gonna look up in the air. Sometimes I'll get into a groove, but I don't do it enough. And then I certainly don't go back to review and videotape and look at what I'm doing right or wrong. And how the hell are you going to get consistent with your results if you're not consistent with your process and your actions? Because you're going to fall victim of, man, this setup sucks, and you're not even trading the setup, but yet you're blaming it. At some point you want to get down to, hey, this is good, this isn't so great, I like this sucks, but you're missing less. You're a breakout trader, you're a retracement trader, you're a, hey, after the breakout happens, I'm a retracement trader. you're a something, because you're not all the same thing in this room. Some are really good looking. Others look like they're from Indiana. I'm not going to pick on anyone in the workshop live, so don't worry about it. You guys are fine. Real quick, and then we'll end it. Again, there were two different things that changed what I was going to talk about today. The Trump thing happening, didn't really have anything prepared because of my son, and then that actually got me to talk about how to manage your risk without eliminating it. And then the other thing is, like, let's say you didn't know about the Trump thing or anything else like that. This could be your trade. I'm going to play it from the short side anytime this SOB comes down to an area where it should stop as support at least a little bit, and it slices right through the thing. That's the only time you're going to trade. Oh, there's not a lot of those trades. You'd be surprised. If you're consistent, there is. Here's another one right in here. Slice through where it should stop. It worked as good support for a while and had an upward trajectory. And guess what? This market would have been higher had it not been for those comments. So leaving this meeting, make sure you're keeping your eyes and ears on a news wire if you're going to trade, because there can be and always will be comments that come down, especially off this Russian story. There could develop into something bad. It could develop into something that is nonsensical. So far, there's been no fire. If this is fire, well, there'll be more of it. This alone isn't fire. There has to be more, I think. But the potential for that is greater after 10 minutes after 11 minutes after 10 than it was before 11 minutes after 10 today. That's all I'm saying. So react. Don't think, react, and review. It's not just what I have that'll help some review better. It's not going to be rolled out to everyone. It's going to be on some different platforms. But it'll be to a platform near you, I'm sure. The other thing is, you got potential to collaborate, so do it. Review. Get with someone and say, all right, it's the summertime, so it's hard to review after the session's over, but you go into that TeamSpeak room and you just go and you could be private with someone else. You know what it is that you guys are all in the workout gym. You guys are all in the gym. That's what the team room is. Once in a while, you got to go back and review what you're doing and how you're working out. It's a workout buddy. You're always going to work out more when you work out with someone else. And I think that you're always going to review more if you review with someone else. But you got to get into a rhythm. You can't just say, hey, Dave, let's go in the conference room. What'd you do today? Well, I bought it there, and I sold it there, and I bought it over there, and no, there's got to be some sort of rhythm to what you're going to talk about. So like minutes to a meeting or agenda, so you could knock through the meeting. You're going to talk about, I had 4 winners in a row, 2 let's just talk about the streaks. And then after a couple sessions, I know what you suck at, and you know what I suck at. But you might not know what you suck at, And that's why it's important. It's like, man, I think I'm pretty strong. And then you work out with someone else and say, man, I'm not that strong. This setup sucks. Really? Because I'm going through your trades, you're not even trading the setup, but you're blaming it. This isn't the setup that you're supposed to trade. Oh, yeah, I got mad. Well, that's fine. Getting mad is fine, but blaming a setup is not fine. Unless the setup did suck and you did trade it. If you did trade it and it sucked, great. Getting mad isn't a reason for blaming a setup that wasn't to be blamed. Well, I took a couple revenge trades. Okay, well, you do that a lot. If you trade my money, I'm going to fire you. One of the best things I said is get a mirror and say it's your fault underneath it. Bottom of the mirror, say it's your fault. You actually feel better. Your mind, that's where your mind puts you on a leash if you're blaming other people. That's your mind putting you on a leash because it initially feels better. Say, hey, it's not my fault. But in the end, especially when it is your fault, for me it's a sense of relief to say, yeah, I screwed up. I got a great marriage because when I make a mistake, I don't mind telling her, you know what, you're right. I screwed that up. It's my fault. Genuinely, though. Lucky you, Carl. I'm going to end the recording. I hope you guys like this impromptu meeting. But make sure, if someone watching this in the future, this Trump comment is probably going to be irrelevant, just make sure you know what's moving the market and what could change that.